You're listening to the 10 Bagger Podcast, presented by the Daily Gold. Join us as we uncover tomorrow's 10 baggers today. And now here's your host, Jordan Royburn.
Hey everybody, welcome back to the 10 Bagger Podcast. Today this is episode number 9, and I'm speaking with a friend of mine. He's Mike Swanson. He's a publisher of Wall Street Window. That's at wallstreetwindow.com. And Mike, as we get started, maybe you could talk about the history of your website and your business and how you first got into gold in the bull market early in the 2000s.
Yeah, I'm going to link that to the idea of finding 10 baggers. It might be a little bit different than what some of your other guests will say that are actually more knowledgeable than me in specific mining and stocks and the industry as a whole. Not that I don't own mining stocks, but they just have a different insider type knowledge than I do, because I've become more of a macro investor. When I started out was in the 90s, and I was trading internet stocks, individual internet stocks, and primarily using pure charts and technical analysis, which I know you're an expert in. But back then, I knew and believed the internet stocks were going to be a bubble and, it one day crash. So I didn't believe in their fundamentals. Not the ones that I was buying, but you could buy stocks in 1999 that, would go up 30% in a day. It was just insanity. But back then, well, as far as myself, I started a website called Swing Trading Online that was about stock picks in 99. And then in 2000, I changed it eventually into Wall Street Window, and I also ran a hedge fund for a couple years, from 2003 to 2006. And after that internet bubble topped out, I first got into mining stocks in 2002 because they were starting a new bull market, and ever since then, I've been very active in them one way or the other. And I'm a believer right now that they're in a similar spot as they were in 2003. But when I first got into this in the 90s, the trading, investing world, back then, the idea of picking out individual stocks was everywhere, in magazines, on television, and there was a book called by Peter Lynch called One Up on Wall Street, and he had I think he coined the phrase 10 bagger, if I'm correct, but in that book he had a couple criteria for picking out the best stocks, and he was looking for growth stocks that were priced cheap. And the primary metric he was using or advocating was something called the PEG ratio. It's basically the 5 years estimated P growth divided by price. And below 0.5, he said, was cheap and had the potential to go up incredible. And once it got to 1, it was fully valued, and 2 or 3, it's, a bubble basically. So these concepts are popular back then, and this is a huge best-selling book. But we're in a different environment today for 2 reasons. One, the individual investor, the for the most part, that's actively trading, they're using exchange-traded funds. A lot of them don't even care about picking out stocks, and then a lot of them are using apps. In which they have very minimal information and are simply reacting to price movement. And I think in a way these things have created a lot of dumb money in the market where people aren't really doing much analysis in what they're doing, and much less in the stocks that they're picking out. But the other thing about the idea of the Peter Lynch of let's find growth stocks cheap is that the U.S. stock market is more than fully valued. So it's very difficult to find stocks with low peg ratios at all for the most part. And in the mining world, some of the stocks that go up the most don't even have earnings. They're junior mining stocks or exploration stocks that are developing an asset, and it's the future potential that makes them go up, and discoveries, not, they got cheaper earnings growth necessarily that you can, predict exactly what it's going to be. So all that said, kind of what I was thinking about knowing I was going to talk with you is tell you what I've found to be the best stocks, the ones that are 10 baggers, and link this to the mining world. But it's basically not stocks that necessarily got low peg ratios or even, earnings growth predictions to them. It's stocks that are fundamentally cheap at the right time. So, for example, it's a sector that has been in a bear market for a very long time, and that's created a cheap valuations on the P ratio, book price to book, whatever, high dividends even if it's the right sector. And if you can get in there while it's turning or early in a bull market, then you have the potential to get huge returns. And that's the difficulty in that is if you try to buy in a bear market before it's over with, you can get your face slammed into the wall. But if you truly buy something cheap at the beginning, you're going to get great values. And that, to me, that's what the real 10 baggers are that work out. They're great values when you buy them at the right price at the right time. Now, at the moment, the way I first got into the mining world and the 10 bagger stock in the mining world I really recall first got into was in 2002. Gold was under $300 an ounce, and people had been bearish on it for years, even though in 2000 it bottomed out and the mining stocks bottomed out. They all went sideways for 2 years with $300 as resistance. And after the 9/11 attack, the stock market rallied, and then it rolled over and was declining a little bit. And I had no thought about the mining stocks at all, but this partner I had at the time, trading partner that we eventually ran this hedge fund together, he called me one week. I was sick laying in bed and said, you got to look at the mining stocks. And this guy was just a pure chartist. That's it. And what happened was the sector was holding up while the stock market was declining a little, and had formed an incredible base to break out of. And so we loaded the boat on these mining stocks. And I actually met in a chat room a friend of mine now it's also one of your friends, David Skarica. And because at the time the stock market was bearish, and this was like the best looking thing, and it looked like something that was going to go up for years, which it did. So through Dave, I went to mining conferences and got to know the industry and so forth. And at one of these first events, if not the first event I went to, maybe the first time I ever met Dave, but it was that year. And again, gold was under $300 an ounce. There was a guy that had a booth at one of these shows called Stan Barty, and he had a stock, a company he was CEO of called Desert Sun Mining. It was trading at 50 cents, and I bought that stock. I can't remember if I paid 50 cents for it or $1, but sometime that year I did buy the stock, and it ended up going to $10. So it may have been a 15 or 20 bagger for me, but it got bought out by Yamana Gold, and it had a producing property that it was able to explore and prove up that it had more ounces and more economic viability and so forth. So it got bought out for $10 a share. That was a 10 bagger, but I didn't really know it was going to be a 10 bagger. I didn't. And Barty said some interesting stuff to me. I'll tell you about in a few minutes. But what the moment, though, to me, the reason this all worked out and became a 10 bagger, and a lot of these mining stocks back then were 50 cents. The Yamana was under $1. I bought it, and so was EGO. There was a company called not Silver Wheaton, but the original Wheaton was a huge stock back then. So there are a lot of stocks back then. In 2002, there were 50 cents or $1 that became 10 baggers. Desert Sun Mining was the best one for me. But what I want to suggest is that what was happening was that the sector had been bear market for several years, had formed a base with gold under $300 an ounce, and then broke out. And so I was at a place where the prices were cheap because of a horrible bear market. The timing was right. And the funny thing is, at that time, in that first quarter of 2002, even though I was talking with Dave and he was bullish on gold, most people in the mining world were not. At this conference I went to, I would talk to people attending, and because they had been beaten up so bad by that bear market, there's very little confidence that $300 level would be broken by these people, and of course it eventually was. And there are some experts, so to speak, Elliott Wave people, that once it did break 300, kept saying it was fake and it would crash and it had to go to 220 or some ridiculous prediction they had that had to happen before it could go up for real, they thought, which they were wrong, obviously. But what I want to suggest is that today, last year, gold broke through 1350. I believe that 1350 level is equivalent to that 300 level in 2002. 1350 has been resistance now was for about 4 years on gold. We broke it, and now we're about $200 above that level. But the prices are still low. There's still a lot of value in the sector as a whole. So to give an example, the average junior mining or exploration stock, these Vancouver penny stocks, throughout all the time I've been looking at these things up until 2012 when that last bear market began, the average exploration company would have a market cap of $25 million. Now, I can find a lot of them with market caps of $5 million, $3 million, $2 million, and I monitor the press releases, and sometimes they are raising money in a private placement, and anyone can look at these, watch this and say, oh, here's a private placement for a stock with a 3 million market cap, or even a 2 million or 2.5 million market cap. I can buy that. And if the metals market continues higher, which I fully expect it will over the next few years, if not this next decade, those are stocks that could easily be 10 baggers. It's not because of any sort of special insider knowledge or anything like that. It's just where we are in the market.
Yeah, I mean, there's a couple takeaways from everything that you said. I think, number one, you were talking about how the real best chance at finding 10 baggers, just when you're looking at the stock market as a whole and not mining specifically, is basically when they come out of a bear market. Because as we know, at the bottom of a bear market, things are priced so cheaply, and then you get the turnaround, and that's how you get these massive rebounds that can turn into 10 baggers. And while you were saying that, I was thinking of the low in late 2015 or January 2016. If you look at even optionality plays, like what they were trading at versus, the NPV of their project, if they had a study, what they were trading at versus the price of gold in the ground. So what you were saying about the market as a whole, that's exactly what happened in 2016 to precious metals. Because in 2015, I mean, those valuations were, from all the work that I had done, they were the cheapest in about 90 years. So what happened in 2016, that's exactly what you were talking about, what can happen after, at the end of a bear market and going into a bull market. And secondly, I think big picture, macro-wise, we're really in the 1960s. The similarities are really strong. However, we know that the gold price was fixed then. And if you look at how gold, if you look at the late 90s bear market, and then it had the, couple years of bottoming, 99 to 2001, and then it recovered and had that 6-year breakout in 2003, as you said, that's very, very similar to what happened this time around with, we had the long bear market, and then it took really a couple years for the bottom to be confirmed, and then we had the 6-year breakout again this past summer. So with all that said, Mike, so then in third, your point about these ultra low market caps, Tommy Humphreys, we did an interview with him, and he was saying the same thing. In a bull market, these companies with a market cap of 5 or 10 million, they can just go to 50 million for no reason at all, other than it's just a bull market and everybody wants in. So I guess my next question would be, how do you feel about finding 10 baggers? Are you looking at those real penny juniors, that the nano caps that have like a 5 or 10 million market cap, and then you want to try and get into a placement? Or, is there a chance where you could find a junior that maybe has a little bit more value to it that could become a 10 bagger? What are your thoughts on those possibilities?
Well, what I'm doing it's kind of funny. With most of my money, I'm actually more conservative. I'm diversified in different sectors and so forth. But with the gold space, what I have done with my investing is I have a long-term position that I'm not trading in or out of in big cap mining stocks, the Newmonts, the Barricks, and so forth. And the funny thing about them, which to go back to the 2002 thing, is that in 2002, those stocks, the big cap mining stocks, really took off for about 8 months, and then they had a really violent correction. And during that first run in them, though, these juniors and exploration stocks really didn't do much. And I think that is sort of repeated again in 2016. That in 2015 and 2016, that moment you were talking about was very interesting because the big caps at that very ninth inning end of that bear market, they were going down, and these exploration juniors did not. They stopped going down in the fourth quarter of 2015, and in 2016, a lot of them just doubled because they're just so super cheap. And the big caps, since 2016, I would say, and going on to today, I would say that they have done much better than the juniors as a whole. But again, this is what they did in 2002, with a few exceptions. There's some juniors that, such as Walbridge, that gone up to $1 from 10 cents and so forth. There's a few, but as a whole, the sector is still very, very depressed. And yeah, it did jump off from being valued at almost nothing in 2015, 2016. But there's really only been one leg up, and that was it for the entire small cap junior space, exploration space. So to me, I'm invested in these big caps. I'm not trying to trade in or out of them. I'm not buying more either. If I had no position, I would. So what am I buying? To answer your question, what am I looking at buying? And the truth is, I'm looking to buy the ones people think are the most speculative, the ones that are 3 cents, 5 cents to 10 cents, that are just exploration stocks. The thing with the juniors that have production, you got to be good at knowing which ones are the best companies, which ones truly have the best properties. I don't have that kind of knowledge. You know people that do, and you know I know people I talk to myself. So what I think is the easiest way to make money is to find some of these smaller plays that are exploration that are priced very low, and something is going on with them where they're gonna, they're not sitting there doing nothing. A lot of these stocks, or the companies are still sitting there doing nothing because the market is still depressed. They still have some difficulty, a lot of them, in raising money. It's not a hot space yet, but I think it will heat up. That's what, from again, that 2002 to 2012 time period, around 2003 or 2004, the small cap space started to heat up, and you can make money buying these things and getting that market. What happens though, once you reach that point, is it becomes very difficult. And we probably won't get here for another year or two. But once most of these Vancouver stocks are 25 million market cap, what'll happen is if you try to just trade the charts, it becomes very difficult to win at it, unless it's a producing company that's gonna come into production and grow earnings with multiple properties, or some company's going to make a discovery. If some fundamental event happens, you can make money still, but just trading the charts randomly, on random stocks, very, very difficult to make money once the market gets more valued than it is. But right now, the valuations are still so low that, I believe you can buy stocks that are a nickel that will go up, at least to 20 cents, and a lot of them will be 50 cents or higher, even $1. It'll be really interesting. So that's my main goal when it comes to this space personally, is to do investments in a lot of these cheap stocks. I'm just watching the news wires, and if something looks interesting, I start calling around, ask you, have you heard of this company? Ask people, have you heard of this management team? Do you know anything about these properties? Because, a lot of people, I don't know. I know a couple, like, let's say, groups out there that operate multiple companies or start them up, but I don't know everyone, that's for sure. So I call around and find out, and that's the old saying, the best ones of these stocks, they got the right properties, they got the right people, but then they'll have a third thing, and that's promotion. So it's helpful if you get a stock that the people aren't just going to, the companies just don't sit there and think, well, we got a great company and that's all we need to do is raise money and do nothing. They got to get the word out on the stock. They got to do interviews, go to conferences, do something, or else no one will, it just helps a lot, especially now when there's still very, very little retail interest, but I believe it'll come. To me, this space is like the marijuana space was over the past couple of years, where there are all these cannabis penny stocks that got a lot of attention of small traders. Those stocks, for the most part, have all collapsed, and I think that plays over with. But I believe in time, those type of people will flock into this space, and that's really what will fuel the prices higher.
So with all that said, Mike, can you share a stock that you own that you think has 10-bagger potential?
Well, it's kind of funny. I mean, the ones I own have already gone up, so I'm kind of looking for new
Like
ones.
Wallbridge. I know you had
Yeah, I had
Wallbridge, and you're
Wallbridge.
also in Aftermath, which is not quite a 10 bagger yet, but is getting pretty close.
Yeah, yeah. Well, I mean, I got that. It almost is. I mean, I got in at 6 cents, and it's gone touched 50 cents, so that would become one. But over the next year or a couple years, well, that maybe that's a good lesson in how this sort of works too, or will happen with all these stocks, I believe. So Wallbridge, I mean, Aftermath is a silver stock that has two properties, and they haven't even started to drill on them yet. It was a development stage company or blank check stock last year, and they raised money, bought the properties, got a new CEO this fall, and now they're going to get ready to start drilling. So just people, I guess, getting the word out on the stock has helped the stock go up to over 20 million in market cap. And what's going to have to happen now is the next stage of doing the drilling, getting some positive results. That'll justify the market cap and drive the stock up. And so that's, I guess, what I'm trying to suggest and saying that is, I think most of these stocks are still dead. Frankly, these junior and penny stocks are. I looked through a couple hundred of them, and from September to now, a lot of them are barely even moving. Even ones that have done private placements aren't really taking off. A few of them, don't get me wrong, a few of them have, but most of them, aren't. So I'll give you, here's a 10 bagger. To give you an example, there's a stock called Gold Cliff Resources, GCN, it's 10 cents. And they did a private, I don't own any, but they did a couple private placements last year, and the stock hasn't even really moved up yet. And the market cap on that is 18 Canadian. So in my view, all these stocks should be worth 20 million US or 25 million, on a fundamental basis, and they're still cheap. So I think this stock should go up. It hasn't. It's not. It's barely even trading. It's done through 3,500 shares a day. But this is what almost the entire space looks like. There's hundreds of stocks, like a couple hundred stock like this. So I believe they're all over the next couple of years likely to go up to that point where they get a 20 million, 25 million market cap in U.S. terms, and then it's going to be the ones that prove up results or have some real positive news that go up to $1 or $100 million market cap. So I think it's easy to get double baggers or 10 or 5 times baggers. Actually, the 10 baggers though, that's going to take promotion and also companies with real results. The combination of the two. And that's the trick. How do you find that? So, I mean, it's one thing just to buy random stocks, right? So how do you really find the ones that are truly going to be the best? And really the only thing you got to go on is, or I believe, we'll see what you think, but I think the only thing you got to go on is the past history of what companies these people involved in the current stocks have been involved in the past. So that Aftermath Silver, one thing that drew me to that, it makes me optimistic that it can continue to go up over the next couple of years, is the CEO, Mike Williams, had 2 companies that got bought out in the last cycles. In a similar situation, you take over property and not for situations such as you go to an investment conference, you go talk to these guys at a booth, and they've been running this company for 10, 15 years, and it's done nothing all that time. So you'll be able to go, I believe, I've saw that in the past, when the market's hot, there'll be stocks out there that have been around forever, and the companies have never done anything, and they still got 25 million market caps, and then you buy it, nothing happens because nothing's going to happen. so that'll happen. I don't think we're at that point yet. We will be in a couple years.
That sounds to be like the prospect generator stocks.
Yeah, it'll come. We'll get there. But even those stocks, I believe, can go up. From here.
Absolutely. But one thing about Aftermath is these two projects that they acquired or are acquiring, they're in the process of acquiring, there was lots of silver there. So I really like that because if there's an asset there that has some past value or they have some kind of a resource, then you can at least anticipate, well, this could have a certain amount of value at, X gold price or X silver price. That situation with Aftermath when its market cap was in basically nothing in the single digits, and you have two projects at a medium grade of silver and have about 67 million ounces of silver equivalent, it's pretty easy to do the math in your head to think, okay, well, if the market gets going, this is going to be a 20, 30, 40 million market cap pretty easily.
Yeah, that's a really good point.
Sorry to cut it. No, I like the criteria that you said, like looking at management. I would say, and what they've done in the past. And then I would add to that, look at the project. Like, is it does it not have any drill holes? You might get lucky and it might be like Aftermath where they actually have a project where it had some past, it has some defined value, or you can define that value yourself. It's a lot easier that way. Because
that's a real good point.
Like a brownfield thing.
Yeah, actually, you're making me think about something I need to do today. But to give you an example of what you're talking about, or two examples. Last year, I got a list of, at some point, all the mining companies found a list of them, of all these exploration stocks that are near production, and they weren't in production yet. So that would mean they've got high grade properties, a couple million ounces of gold and so forth. And a lot of them were still cheap. Most of them I was looking at still had market caps under $20 million, and a few of them are doing private placements. I should have bought them in hindsight, but I'm thinking to myself, I got to go get that list and keep my eye on them again. But to flip it around though, today I scanned the Newswire and I saw 3 mining companies announcing private placements. All had market caps under $5 million. I'm thinking, I'm doing this because I think that this is a good time to start buying some of these. But I looked at one of the companies, and it said that the property they're going to drill is somewhere in the North America where there's logging properties, hundreds of acres for logging, and a logger saw a boulder that had some gold in it. So they're calling that a discovery, and they're going to drill for that. So I'm like, is that really viable? Does that really make sense? Is that a good property? That sounds kind of crazy.
Yeah. Well, on that note, Mike, we have to wrap it up here. We could talk all day about this, but thanks so much for the info. I really appreciate it. I appreciate the history, the origin of the 10-bagger story. And before I let you go, please tell our listeners your website and how they can follow your work.
Oh, sure. Yeah, it's just go to wallstreetwindow.com, and you see blog posts on there. And I update it every single day. So if you just go there and click the top blog post, it's usually something I've written.
Okay, thanks so much, Mike, and I look forward to having you back in the future, in the months ahead, when we can talk more about 10-baggers.
For sure. Talk about something we get into, hopefully.
Thank you for listening to the 10-Bagger Podcast, presented by the Daily Gold. For premium coverage of precious metals and the best junior mining companies, visit thedailygold.com/premium.